Hello traders, good afternoon. Welcome to the live webinar with Elite Currency. My name is Chris Svorcik. Thanks for joining. We're going to take a look at the technical analysis of the euro dollar. Okay. And of course, also an update about what's going on with the economy in US with the FOMC interest rate decision that was yesterday on the 13th of December. And we're going to take a look at Flagship performance in a little bit more detail because 2 weeks ago we review the performance of all our methods and systems. I want to zoom in a little bit on the Flagship because of its interesting results that we've had in 4 years of live trading. So that's really, really very long. And plus the new option of trading through our PAM and MAM with 2 brokers. All right, so that's new. So there's a way to join the Flagship now, not only through crypto investments, but also through MAMs. And I think that will make it easier for some of you to join because with the MAM, you have your own account, you have access to your account and your capital at any moment. So it's an advantage to invest through a MAM like that. So all of that and more is for today's schedule. Okay. Now, first of all, euro dollar 2 weeks ago, this is what I was showing. And this seemed like the path of least resistance to me, based on chart patterns, wave patterns, price patterns. And I expected it down here and then up, and then again a down, 5 waves down, and then again 5 waves up to finish a bigger ABC, and then maybe a downtrend again. This is looking really, really long in the future. So, of course, when looking out that far, there's a lot of room for error. The shorter, the more we look at price in the short term, of course, the accuracy tends to be higher than looking far ahead. The accuracy tends to be lower. That's normal because we have information about what's going on now that will impact the near future. But there's so many factors that will change in the next year that we don't know now. So it's, of course, more difficult to predict something 2-3 years from now. It's the same in weather. It's the same in economics. It's the same with charts. They're all the same. So let's see what it looks like now. Okay, so did we have it down and up? Yes. Indeed, we had a bearish week, then a bullish week so far. This week is not finished yet, but so we had that kind of movement. Now, I must say, based on economics, which we will discuss a little bit after this segment, I want to revisit what I did 2 weeks ago because I think maybe that the downside is not as clear. If the US will start to decrease interest rates next year, and the Eurozone with the euro will still hold that decrease, the euro might actually win against the dollar. So I would rather, when looking at technicals, stick to these trend lines and the 21 EMA and the horizontal support and resistance. And I think a breakout should, generally speaking, give us quite some information. Now, of course, with breakouts, we always have to be careful of false breakouts, indeed. And therefore, a good candle close near the high or near the low, near the high for a bullish breakout, a candle close near the low for a bearish breakout would indicate that the bulls or bears remained in control throughout that week. And therefore, the breakout is statistically probably more likely to not be a false breakout and continue in that direction. That's one way of measuring such a breakout. Another way could be, what I like, is to zoom into a lower time frame, or even use both ideas. Wait for this candle to confirm a good breakout, and then zoom into lower time frames. And typically, what we see after with a breakout is that we see an impulse followed by consolidation, and then a breakout of that consolidation. So if we see a bullish breakout, we see up, followed by a sideways flag, and then again an up on a lower time frame, like a 4-hour chart. Or with the downside breakout, a bearish breakout, we could see down, bear flag on the 4-hour chart, or 1 hour chart, and then down again. Now we're looking at a weekly chart, so I would say a 4-hour chart on the lower time frame is probably the most adequate. But of course, it's still good to keep an eye on multiple time frames, including daily and hourly. Maybe even 15, but that's quite low. So will price break below this 21 EMA low and the green support trend line? Or will it break above the red resistance line, stay above that 21 EMA zone, which is the purple lines here, drag the short-term moving average over the 21 EMA high, and break above this horizontal resistance? Well, then it looks like it's going up to higher resistance, up to these key levels here at 117.50 and 120. Okay, and in that case, it's completing probably an ABC quicker. Whereas if it breaks through support, I would expect a wave C down. Now that move down could be impulsive or a little bit choppy, like a falling wedge. If it's a falling wedge, it could stop at the -272 target. If it's more impulsive, then it probably will go deeper towards the -61.8 target. If it does break up, I would put a fib from this bottom to this top. And I think that this is probably about halfway. So there's a 50 fib. And the target would be the -272 target around here and the -61.8 target around here. So yeah, interesting. But how will the fundamentals push this technical chart or support this technical chart? Well, as you probably know or might have heard yesterday, the Fed has kept the interest rates in the US flat for the third time in a row at 5.5%, which is quite high. It's the highest it's been since the early 2000s, because as you can see here, in 2005, it peaked at 5.25% before going down with the Great Recession. Before the COVID epidemic, it was at 2.5%. And all the way back in 2000, when we had the tech bubble, basically, right? It was only higher. At that point, it reached the peak of about 6.5%. So pausing, it has been an incredibly quick growth of the interest rates, definitely into 2022 with jumps of 0.75% and 0.5%. Recently, it started to slow down when you saw 0.25% pushes, and now it's been flat. So there's a curve there, as you can see at the very end, and now flat. So it's rounding a little bit. And of course, that has to do with inflation that's cooling. In fact, the Fed said that inflation is cooling quicker than they first anticipated, which is positive news for the Fed, for everyone in general, for business, because then that means that the chance of the interest rates going further higher is lower. And if the interest rates stay put and maybe decline, then there's a higher chance of a soft landing, which we'll explain in the next slide, where the economy doesn't go into recession, but inflation has been tackled or handled. So that said, there has been a slowing of economy. Some record sales have been seen with certain events, with Black Friday, for instance, but the economy itself generally apparently slowing. On the flip side, it is also a resilient economy despite those higher rates. So how you can interpret those words, they seem maybe a little bit contradictory to each other, is that yes, the economy is slowing down. Maybe it's not as strong as it was maybe a few months ago, but it could be worse, right? It could be that the economy under conditions with such a high interest rates might slow down even more. So yes, it's slowing, but still resilient. It's not that bad, perhaps, as it could be, despite those higher rates. And the good news is that the inflation is cooling quicker. Now, reaching that 2% target is not easy apparently. Specifically, that last push, maybe from the three, between the 3 to 4% towards that 2%, and therefore the Fed is keeping the rate hikes on the table. It says it remains possible, but the market, and this is the U.S. interest rates image. This is the EU Eurozone interest rate image. The market is not really believing that and thinks that the interest rate hikes have reached a ceiling, a plateau, and that they expect rate cuts to come in 2024, and they are really seeing the words that are softening from the Fed as a first, or maybe not first, but second or a step towards the Fed going into the direction, in the same direction as what the market is thinking. Okay, so they see that as a small confirmation of what they already expected, and therefore the stock market was up and reached the intraday high, all-time high, I believe, I think, as well. So so far, the Fed officials are also expecting in 2024 a 0.75% cut, so that would bring it from 5.5 to 4.75% in next year. Now, the big question, of course, is will there be a soft landing or not? And honestly, I don't have. I think both are valuable or viable paths. I'm not sure which one I would choose at this moment. Some economists say that the economy remains resilient, considering the higher interest rates. So some are more confident about the prospect of a soft landing. Of course, they also know it's not a guaranteed thing at all, because the inflation remains above 2%. But yeah, we have seen quite a resilient economy. Unfortunately, if we look at the US, Americans are continuing to take and use their pandemic savings as their credit card balances grow. And we see retail sales falling for the second straight month, according to FactSet. So mixed there. Now, others think that soft landing is still not that likely, despite the significant progress on inflation and strong economic, relatively strong economy still. They think that the last push to the path of 2% inflation will be the most difficult, and a combination of below trend growth, rising unemployment, and slowing wage growth will make it too difficult for a soft landing. If I had to choose, I would still count on a softer landing. Maybe not a full soft landing, but maybe where there's not a full scale recession. I would say is still probably most likely, in my humble opinion. But let's see. Two sides of there are definitely two sides here. Both of their arguments. I would lean towards a softer landing side, but could there be a technical recession where maybe the economy doesn't grow, but for 2 quarters in a row, but the lack of growth is very small? That could happen. It has happened already a few years ago, right, where there was a technical recession, but it was just very shallow. How it contracted and then it grew again. So let's see, something like that perhaps is my best bet. But anyhow, this is good to know. All right, now here I wanted to show you my historical performance, the average of all my accounts. Now the reason I will show you my FX book link of one of these accounts in the next slide. So for those that are maybe wondering, I don't want to, it's not important what you're showing here because this is a table you made and I don't believe it. that's fine. Just hang in there to the next slide where we have the MyFix book link. For those that know us a bit longer, you know, I have 20 accounts, so, or maybe 18 at the moment. And so what I do is I make an aggregate of all the performance, the average performance of all accounts, weighted average performance for each month, because my FX book just shows me the results of each one account, and I could, of course, look at all 18 accounts, but I myself make that average weighted per month, so I know exactly what my return of investment was with Flagship. This is only Flagship for that month. So as you can see, I started in November 2019, so that is 4 years ago, and 4 years and 1 month ago already. All right, this month we did month 50 already, and I want to extra emphasize the length of this track record. I'm not sure if everyone really fully can digest that length, but just think about it. That is really, really long. That doesn't say or mean that the next month will be positive, or that the next year will be positive, or that anything is guaranteed in the future, because we know that past historical data doesn't give any guarantees about the future. We all know that. But of course, it does give me at least the confidence to keep trading and investing in this, and of course, grabbing the profit when I think that this is logical. And that's, of course, always good. But as you can see, looking at 2020, 2019, I only had 2 months with 16% in those 2 months. But 2020 was a fantastic year, primarily because in June, I made 135% on that. So the rest of the year was about 70%. Okay. So that kind of skewed that particular year because of that one big month of profit. The year after, I had 110. Last year, I had 98%. And this year, only, okay, 61 is still a great result, but it's a little bit less than 2022 and 2021. But if you look at the results, every year has had only 1 month of losses. This year that was January. In 2021 it was January. And last year was March. 2020 was March. So it was either March or January so far in these 4 years of trading, and in December once. The worst month for myself was 4%, almost 5%. And after that, minus 3.5, minus 2.8, minus 1.3, minus 2.4. But as you can see, some first quarter was a bit slow, but second quarter here is about 20%. Third quarter was about 26%. So far, about 7%. Let's see what December delivers. But I think this is very interesting to see that performance summary. Okay. Now, as I mentioned at the beginning, not only can traders join through crypto, but also through Flagship PAMs now, or MAMs, I should say, managed accounts, so that you open an account, you add the capital, but we trade it through these two brokers, and then only thing you need to do is keep an eye on the performance and withdraw the capital when you want. Profits, if they're there, when you want. To join this, please write us at info@elitecurrency.com. info@elitecurrency.com. That's the very first step. If you want to join the Flagship, if you feel that you have spare capital left to risk, then write us at info@elitecurrency.com. Okay. Here is that MyFix book that I promised of one of the accounts. And as you can see, a drawdown of only 10%, monthly average return of 8.3%, 250 in total, equity curve pretty much up, and the drawdown only 10% in max. So this you can see on our website as well. So you have some evidence of that, and you see track record and trading privileges have been confirmed, so that you have this as some information as well. And this is independently verified. But as I said, I have many more accounts. So I want to know what is the average of my performance every month. So that's why I do calculate that myself. But from each individual account, of course, I can check it with my FX book. Now, not only is that great, but the currency has made some great updates. We've made some great updates with regard to the login for the members area with live tracking. As you can see, the percentage of profit and loss in dollar terms, the balance, profit share paid, the performance of each account that has been trading there. As you can see, the methods separated. Okay, all that information here, very, very clear. And this is a new interface for the members area. So that's great. And once again, a Flagship in a nutshell, 4 years of trading. You know, once a year, maybe a losing month so far, but otherwise only profitable months. The drawdown, not more than 5 to 10%. So it's quite suitable for risk-averse traders, at least, in my view. But always consider what is your own risk tolerance, of course. And it's it's a great mixture of technical and fundamental. So once again, write us at info@elitecurrency.com and track us on my FX book. Okay, so this is how you join that Flagship. The best is to ask us through email, and we will guide you step by step how you can do that. That's the best for starting with the Flagship. Okay. All right, folks. Well, I hope that you found this interesting. So let's see regarding euro dollar. Let's see regarding technicals and the stock market and the fundamentals. I mean, over 2 weeks. 2 weeks from now, we'll have a new update again, a new webinar update with not the entire month of December behind us, but almost the 28th of December. We'll have another webinar where we take a look at the performance of December, or almost finished, completed performance. I don't think we'll be trading much in those last few days of December anyhow. So looking forward to seeing you then with a new update. Wish everyone great trading and hope to see your email about joining the Flagship. But in any case, wish you all great trading. Cheers. Bye-bye.